Good afternoon and welcome to Melbourne Business Network's webinar with Northbridge Capital's two-part series on the 7 foundations of startup success and capital raising. Before we get started, we have a few items of housekeeping. As Bradley mentioned, my name is Wendy Dawson, and I am the president of the Melbourne Business Network. We've got a couple of other committee members who may be on this webinar. Libby Dale, our vice president, and Anita Botel, our executive officer. The NBN is a not-for-profit networking association which has been operating since 1994. Our focus is to facilitate connections, communication, and collaboration with businesses across Melbourne through face-to-face networking activities and the B3000 Awards program. But just like you, we've had to look at new ways to do business, move online and network in different ways. Although this is a virtual event, we do encourage networking, so please feel free to copy and paste your LinkedIn URL into the chat box. And be sure to connect with other people offline and set up virtual coffees or conversations. You will notice that you've come into this webinar with your microphones placed on mute. This prevents any background noises as we get started. Although this is a virtual gathering, we believe in an official recognition of the traditional owners is as relevant in the opening of a webinar as it is when opening an in-person gathering. So in the spirit of reconciliation, the Melbourne Business Network acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to the elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. There will no doubt be a number of questions that arise during this presentation. However, Bradley and Basil have asked that we hold all questions until the end, but do type them into the chat box so I can collate these for them. A bit about our presenters. Bradley Birchall, with a diverse range of experience as an entrepreneur, founder, CEO, and CIO of various successful companies, including Seek and Computershare, Bradley has launched and worked with many successful startups, raised millions of dollars, and rapidly grown tech startups from zero to hero. Bradley regularly advises companies on international growth, capital raising, marketing, and technology. Our second presenter is Basil Tambanis, an accomplished executive director and corporate advisor with 20 years of experience building, growing, and leading multi-million-dollar organizations. With extensive capital raising experience both as an advisor and serial entrepreneur, Basil understands the complexities involved with creating scalable, profitable, and sustainable businesses that maximize shareholder return. And on that note, gentlemen, over to the two of you.
Thanks very much, Wendy. It's really a pleasure for myself and Basil to be here and to actually have the opportunity to talk to NBN members and other people out there about startup success and what's actually involved in preparing and capital raising. And so I'll just start this presentation off now and we'll get everyone straight into it. So the sorts of things that you're going to get out of today's session and our follow-up session are going to be strengthening your business, positioning your company for growth, and the sorts of things that you have to do to actually prepare as a founder, but to also prepare for those investor questions and the actual things that come up with capital raising. And there's a lot of that, so that's what we're going to go through in today's session. We've got about 40 minutes set aside to run through this, and then we've got Q&A. So we'll see if we can get through that in that time, if not sooner. What I'll mention right up front is we are actually going to have 2 giveaways at the end of this webinar. One's actually going to be an offer for NBN, and we'll cover that right at the end, so stay tuned for that piece. Northbridge Capital, where myself and Basil put a lot of time and effort in, we're actually going to have an offer as well. So stay tuned till the end of this session and you'll find out more at that time. At this point, I'll now hand over to Basil, my co-founder in Northbridge Capital, to kick us off on the 7 foundations of business success. Over to you, Basil.
Thanks, Brad. Thank you, everyone, for having us. We're looking forward to presenting this webinar today, and we have designed it in a way that whether you're a startup or a mature business, there is something for everyone that they can take away and implement into their business straight away. We're going to start with the foundations of what it takes to build a successful business, and we'll quickly move through these. But one point is that a lot of you may say, yes, I understand culture and market strategy and that we need a scalable business model, but very few companies actually do this well and are disciplined to build strong foundations. And if you took any of these and just focused on them for some time, you'd certainly end up building a stronger business. So in the first of those objectives, it's all about clarity. What are you building? What do you want your company to look at exit? And why? So in 8, 10, 12 years' time, what do you think the company you are building today, what would you want it to look like, and how are you going to get there? And over that sort of period, you need to determine and clarify short-term goals, medium and long-term goals. And what's important is developing a strategy to execute to achieve each of those goals or milestones. And we've found that the best companies do this through collective decision-making and embracing the input from their entire teams. And what we think separates really good companies is making sure that their team members, and whether you're a senior management or a blue-collar worker, that there's clarity around what your role is, how you fit into the team, and what's expected of you, and how collectively you work as a team to execute on a strategy. And so in summarising all of this, we've got an X and Y axis chart here, and along the bottom we have time, milestones, and equity dilution for investors and founders. And so each one of those green hats or pyramids is a major milestone, and preceding those is some smaller blue triangles, which are all activities that need to be scheduled to achieve those major milestones. And the way that every company, whether you're a startup or a large company, whether you're going for mezzanine or debt funding or startup seed capital, this is a good way to present what your journey is going to look like, or what you want it to look like, what you expect it to look like. Each one of these key milestones should deliver an uplift in value for investors and shareholders. And so if you're a startup, for example, you would hit hurdle 1. You would then increase the value of the business, at the same time decreasing the risk every time you hit one of the key milestones, and then raise additional capital at higher valuations to execute the next milestone, and continue to do that until you get to a point which is your exit, whether it's a trade sale, IPO, or whatever that may look like at that point in time. Now, these journeys never work out the way you expect them to, but the better clarity that you have, the better strategies, and the easier they will be to execute. So, a question that I always ask companies is, and why is it that some small under-resourced teams can outperform larger teams? And I spent the first 20 years of my business life in small teams competing with much bigger companies, and we were successful. And I never really understood why until later on in my business life. But it's all about culture and making sure that there's engagement, support, for your teams, good alignment, and that everyone's motivated appropriately, and it's not just dollars and cents. And where you have those sorts of cultures, you can generally attract top quality people. It's very rare that you'll get top quality people going into a culture that isn't really what they want to be part of. So comprised with that is strong leadership. It's important to lead from the front, and I have to say not all companies do this well. And on the leadership, I think what else is important is you need to allow your people to make mistakes without getting punished. Allow them to try new things and give them enough rope where they can grow and show their ability to deliver. And, a lot of times things don't go to plan, and most cultures and environments, punish people when things don't go right. I think the best companies that I've worked in and been part of support those people, and where they make a few mistakes, they probably get more involved with support rather than persuade people from trying new things. So, if everyone here or everyone listening spent 10% more time in any parts of these areas of their business, I think they'd have a better result. Brad, I'm going to hand over to you about the customer.
Thanks, Basil. So knowing your customer, this is one of the key things that we find startups fail to prepare for frequently. There's been many occasions where we've had startups that are maybe 2 years old come to us and say, can you guys help us actually raise capital? And then when we start to drill into understanding of their customer, we find that it's quite often very thin. And when I say that, I mean it's not just good enough for you to actually have an understanding of your customer that says a female, age 30, is the person we're targeting. We're talking about having real demographics about these people. So what are their interests, what are their wants, what are their desires, what are their needs? And you need to understand these things so that you can determine a proper product market fit. And what that actually means is research. Actually surveying potential customers for your product. And that might take the form of doing online surveys, it may take the form of actually engaging a marketing company, it might actually be just going out there and knocking on doors. At this time, that's going to be tough, but we're talking about actually getting hard data. Now, some of the places that you can get this information is online. You can pay for research reports, and other ways that you can get it is just through surveys. But it's really important that you go out and get this information, because the next part that you're stepping forward on once you have this information is then knowing your market. So how many of these customers sit in your market, and how many of them are you going to target with your product? One of the things we frequently come across is that the target market itself is also not understood. And that usually comes from a lack of understanding about the customer. And so when you actually have that in-depth understanding of your customer, you can more easily identify your target markets. So I'll give you an example. If we had a client that wanted to go into a US market, and their understanding only went so far as we want to target males that are between the ages of 30 or 40, and they didn't understand anything further about the customer, it would make it very difficult for them to determine what the best channels were. And so when we talk about that comes into your go-to-market strategy. And so that understanding of the market and then the channels comes together to give you the ability to go to market. And so I'll give you an example. Back to the US. We think our target market is males between the age of 30 and 40. But if we haven't done the research, we haven't tested, we don't know for sure. So we might think we can use something like LinkedIn as a channel to approach those people. And then we might go out and do some campaign out there that was trying to attract those people into our product. And we might be wondering why the response rate that we're getting back from that particular channel is poor. And it's because we didn't have a good understanding of our customer before we went to that channel. And so I'll give you a bit of an insight into how at Northbridge Capital we look at things like channel modelling so that you can then understand what that channel looks like. All right, so what we're looking at here is the sort of process that we would go through when we want to analyse a channel. And so what we've got up the top left here is basically a channel made up by a sales team. So that's people, old school, picking the phone up or actually going out, meeting with the client and communicating with them. And so what this model tries to do is break down the conversion rate of those direct communications as a channel. And then further down, we'll analyse things like what does an email or EDM market as a channel look like? What are our sorts of conversion rates that we get through to our sales in the product? And then eventually the orders as well. The next channel down is around Google AdWords and SEO. So what sort of response rates and conversions are we getting out of that channel? And the final channel in this example is LinkedIn. And so what we do is we analyze what all of those conversion rates are, what the cost of acquisition for that channel is, and then we can work out how much revenue we're making. So off to the right-hand side here, we can actually see our costs, our revenue, our profits, and what we're getting out of that channel. And so this is the sort of thing when you go to channel modeling that we would do and that I would encourage a lot of people to think about, not just about the normal channels, which are direct sales or just a sales team. Think about what your other channels are. So that's really important. The next part of this is then sales modeling. And so what we're doing in our sales modeling is we're thinking about our sales team conversion rates. So if we had an A team, we might expect an A team of salespeople to be able to close 20% of their leads that come into them. If it was a B team, we might expect that to be 10%. And if we couldn't afford a lot in the way of our salespeople, it might be a C team to start with, and our conversion might only be 5%. And so you can see how these channels come together. Your sales team is just one other channel that makes up part of your go-to-market strategy. And so if we then look at how the modeling of this might look, we can see in this example here, we have 3 products. Our 3 products are starter, business, and enterprise. Obviously, they have different price points. We can then see a factor here of 100% for our sales team quality. That's something that would probably vary, as I said, A team or B team. And then we look at how many leads are actually coming through, and then what is our increase on an annual basis in the leads that we're getting into that team. And then we look at what the close rate is. And then we look at what the split between our different products are. So in this case, 50% comes from the first product, 30% comes from our second product, and 20% comes from our third and most expensive product. And then that tells us how many actual leads we're getting through for each product. And so that is the basis of price and sales modeling. And we frequently find that there are very, very few companies that think about this stuff, and they might have put it into their financials, a really basic financial spreadsheet. Maybe it's just 1 year looking forward. Ideally, it'd be 5 years looking forward. And we find that there might be some of this in there. But quite frequently, we find people don't look at this as a separate exercise and a separate undertaking, which you really should, because it's a lot easier to look at this in isolation from the rest of your financials and just focus on this. If you can focus on this and look at what your pricing is for your product and what sort of leads you're going to get through and how you can convert those leads, you are going to have a much more solid understanding of how your business is actually going to operate moving forward and what sort of revenues you're going to see. So where this all starts to come together is in your revenue. And you can see that we sort of built up to this point where we need to understand our price that we're selling our product for and what that sales modeling looks like, because that's going to determine revenue, and that's what goes into your financials. So some of the other key things in our financials, a burn rate. This is one of the key things that investors want to know. They want to know how much money that you're actually burning on a monthly basis. Now, I know some of you might not actually be even thinking about raising capital right now, and you're more interested in just growing your business. Regardless, you should still understand what your burn rate is. How much do you actually have as cash in the bank minus your monthly expenses, and then you can determine what your runway is. And so understanding your runway tells you how long you've got till you run out of money. And so as a company, we frequently have organizations, founders come to us and say, look, we'd like to raise capital. Can we start tomorrow? And we go, okay, let's have a look at what your financials look like and your business model. And it's at that point that we discover that the runway for the company might only be 3 months or 4 months. And the material that's being put together isn't of a sufficient level of quality, A, for them to even run their own business effectively, and B, be able to raise capital. And so when we find that, we know that it's going to take at least 2 or 3 months of effort to get everything up to speed of the level of quality that's required to actually start to grow the business properly and to be able to present it to investors for a capital raising. And so it's really important that you start to think about these things now or very early on in the piece, because they've got to be ready and prepared. Too frequently we see companies that are just not prepared yet for capital raising, but they need money in the next 3 months. And I say that because a capital raising process doesn't happen overnight. It usually takes about 3 to 6 months to do a proper capital raise. Okay, investment. This is a key part of the financials. And so investment into your company, be it out of your own pocket, whether you're bootstrapping it, or whether it be from an investor, is critical to your growth as a company and your survival. And if you have an understanding of those sorts of numbers that we talked about earlier, with the actual growth rates, your price modeling, and what sort of conversion rates you're going to have, you're starting to understand how much money you're going to have to spend on your sales team and your marketing. And it's that understanding that drives your ability to determine how much investment do we need. So if you know you're going to go out and spend $200,000 on marketing, and you've done the modeling on your channels and on your sales team, you understand that to acquire a customer, it might cost you $100. So if you've only got so much money to spend, that'll tell you how many customers you're going to acquire, and that'll tell you how much revenue you're going to get, and then you know how much investment you need to raise. And that then comes into what we call capital strategy. But We're going to cover more on the detail around this and what investors expect to see in the next session, because that's a very, very specific session focused on exactly what investors want to see and how you put this sort of stuff together. Let's talk briefly about the business model. And so the business model is, again, one of those things that we find isn't necessarily well prepared by a founder. And if I was to turn around to you, for example, now and say, can you pitch to me your business model? What we usually find is that founders take anything from 5 minutes to 20 minutes just to be able to explain their business model. And that business model is made up of all the things that we've already covered now. And the key things being, what problem is being solved? Who is the customer? And this comes back to knowing about your customer and why you need that data about your customer. How big is the market? So again, we covered how big is the market. Do you understand how big the market is and where your customer fits into that market? And then channel to market. So again, understanding. Do you know your channels to market? Have you done some modeling to look at what your conversion rates might be on those different channels to market? And then finally, revenue. And so we've talked about where that revenue comes from as well. And so putting all of this together then brings us to an example. And so what you really want to be able to do is explain to an investor or anyone else that's interested in your business what your business model is. And so if we look at the example here, we're going to talk about where we are a software as a service company. We provide solutions to fix problem X to customers who are in this demographic and are located in Melbourne, that we access through LinkedIn, Facebook, and other channels to market, and they pay us $100 per product every month. And so that you should be able to get out in 60 seconds. If you practice it, you might get it down to that. But even 5 minutes is good. But you need to be able to get this stuff out. And doing that background research and gathering that information that we've already talked about on your customer and your market and your channels will then enable you to actually be able to reel this stuff off fast. People don't want to wait 10 minutes for it, right? So you've got to get this down pat. And that's part of what we're going to talk about with the offer that Northbridge Capital's got coming up. So what we want you to do is before the next session, we'd like you to practice that business model component. And ideally, record it on your phone, prep it, send it to us as a link, and we'll judge the result. And we'll be able to see this replay in the video. So at the end of this webinar, you're going to get an email that's going to have a replay of this video. So go back over it, have a look at it, and step through those pieces. They'll probably help you get this done. Not everyone's going to want to do this, and you might not even have come up with your business or be running it yet, but I'd still encourage you to have a go because you're going to learn a lot from the process. And we'd really like to see that come through from you. And at this point, I would say enough. I'll hand back over to Basil.
Thanks, Brad. Look, all of those things that Brad just ran through, we will build on those in next week's session. And ultimately, all successful businesses need to scale and grow their businesses, raise capital, and that may be through debt, equity, or a combination. And we will work through how to present your company for investment. We call it investor readiness, and Northbridge works with its customers and delivers 3 fundamental programs. And the first being we analyse and do a SWOT analysis of your business in phase 1. And in phase 2, we take all of those critical elements that we've identified through phase 1 and work on those so that in phase 3, you can go out and present to investors. So next week, we'll do some work on investor presentation, types of investors, how to manage your equity and dilution and capital strategy which is important to manage from early stages. It has significant impacts on your exit, and how to live and work with investors, whether you're going to see them for the first time or whether they've been on your register for 5 years and you need to keep them motivated to keep contributing. So we'll cover a lot next week. I won't give it all away now, but if you can get your pictures together, that'd be great. Brad and I would really enjoy going through them. And
so basically what we want you to do is to pitch it. Pitch that business model to us, whatever it is we want you to do through, or attach the video, that's okay as well. And what we're going to provide is 2 hours of free coaching to the best pitch that we actually get. And so before next Wednesday, we'd like to see that from you, and that'll be good. NBN. So I'm about to put an offer up for the Melbourne Business Network now. All right, moving along. So now into questions and answers. Okay, I'll take that first one. So how do you basically work out what the runway is? Okay, so it's effectively how much cash in the bank that you have at any particular point in time, given your spend in its most simplest form. So if your outgoings are $1,000 a month as an example, and you've got $10,000 in the bank, your run rate or your runway is 10 months. And so what investors look for is how much runway do you actually have before you're going to run out of money. And that is it. It's not actually that complicated. So it's pretty simple. I hope that answered the question.
Like, is Joanne asking if she's cash flow positive, how does she determine her run rate? And ultimately your run rate is how much cash you've got before you run out of cash. So to increase your run rate, you can slow down your spend. Right now it sounds like she is not going to run out of money because revenue is covering expenses. And my only question is, what does your business do and what are you trying to achieve in it? Because most businesses are seeking to grow. And if you're seeking to grow, you're reinvesting all of your money to scale a business. So depending on what her objectives are will depend on how she looks at what her run rate is, how much money she should spend, and future run rate might be a lot shorter if she scales the business.
And Chris from the audience tended to agree with that synopsis as well. His comment was, if your revenue is greater than expense, runway is not relevant. But Bruce has posed a question. For the pitch submissions, are there any items that definitely need to be included or omitted? Can or should we use slides or other media? Are there any particular areas, financial or technical, that we should cover?
Put it as a video. There's no need for you to do it as a slide deck. But if you wanted to do that and send it through, that's fine. But we actually want to see you pitching it. As far as the information that's contained within it, stick to the business model. So don't worry about anything else outside of that, because what we're trying to do is get people to think about the business model itself, because there's enough that you're going to have to do behind that to be able to put it together to explain it well. And again, this is under 5 minutes, ideally 60 seconds. And so I would be very surprised if you were able to go into financials and everything else and roll that off in 60 seconds. And so that's why we're looking for focus on the business model, because that's the key thing. That's the key thing you've got to get across to investors, and that's what you've got to be able to deliver fast.
Can I just add to what Brad said? Business model is absolutely critical. Doesn't matter what industry, sector, business you're in. And now people are looking at old, mature businesses and trying to reinvent them with new business models. And so what I would suggest at a bare minimum is understand what the relationship is with top line and bottom line through different life cycles as you grow, and how you manage margin in your business. And many businesses can grow from a low base quickly and it looks impressive, but then they stall. And so think about how you can develop a scalable business model for what you're doing. And that's, I think if you just do that and understand those relationships, that'd be a good start.
Colleen has asked a question. Can you talk a bit more about channel and sales modeling and where we can find more information on the conversion rates, etc.?
Thanks for the question, Colleen. Look, there unfortunately is not a lot of stuff that you can find online that talks about sales modeling and conversion rates and stuff like that. There's not a lot about it. And that's probably why people find it so hard to actually get their heads around it and understand it. At the end of the day, really what it boils down to is testing it. And so if you want to understand what your conversion ratios are going to be for something like Google, for example, so you want to try and understand what that conversion is going to be if you put some marketing out and you pay for it on Google, I'll give you an example of what I do. So I would take $100 and I will go into Google AdWords and I will build a little campaign that basically says, serve this one piece of content and I'm prepared to pay $5 a day until I run out of my $100. And then what I'll do is I'll look at what was the conversion rate, how many people clicked on it, and how many people acted on the call to action for it. And really that tells you how much people are willing to spend and how many people actually click through. And so that'll give you an idea about your conversion rate without having to burn lots of dollars. And Google's really good at suggesting to you, oh, you should spend $3,000 on this campaign, right? Ignore it, spend $100 or even 50, run it, see how it goes, and then you can start to think about what it might look like. So the other area where conversion comes into it is in your sales team. And so how I came up with those numbers on sales team conversions, and this is a little bit easier to find, you can search the internet for it. I've always found that really exceptional salespeople can do close rates around 30%. Doesn't matter what the product is. If they're good in that market and they're good with that type of product, their close rate will be around 30%. If they're your normal type of salesperson, their close rate's going to be about 12%, 15% at best. If they're a young BDM and maybe not so much experience, or you're not paying them a lot, you might find their close rate is something around 5% to 10%. And so they're numbers that I've found over my entire career in building sales teams just are true every single time, Nelly. So low end, 5%, middle of the road, 10%, high flyers that are absolutely brilliant at sales, anything from 20 to 30%.
Chris has asked, when we're talking about conversion rates, are we talking about conversion of a lead into a client or click-through rates?
It depends on the channel. So if your channel, the channel you're talking about is your sales team actually going out and talking to people, then it's the conversion rate of your sales team. If your channel is your marketing campaign through Facebook or Google, then we're talking about click-through rates, and then we're talking about conversion of those click-throughs, so how many then convert, and we're talking about the cost of those conversions. And so what people frequently do is they only look at a certain type of channel. So they'll just look at salespeople, or they'll just look at online, Google and Facebook. They usually don't put the two together. And what you really have to do is put the two together. And the reason for that is, even if you have a good online conversion rate, you can always improve it with the sales team. So you might find that people don't go all the way through and purchase your product online, and you might need your sales team to follow it up. Or your product might not be purely online, but you might get people through and then hand them over to a sales team. And so it doesn't matter what sort of business you're running, you should always consider the digital channels and physical channels as well. And then the other channels we didn't go into too much detail on are partner channels. And so your product, you might not sell directly to your customer. You might have, say, a B2B product, and that product might be better sold through a different type of company or group of companies that have direct access to that channel. And so that's another thing to consider again. So it's not just digital, it's your sales team as well, and it's the potential for you selling your product through third parties. I hope that answers the question.
I think it did. I haven't seen any rebuttal yet coming through from Chris, but Colleen certainly thanked you for the earlier answer. I'm going to insert a question here, and I guess this is actually geared towards Basil.
The question was, at ground level, how do you bring on people so that you can sequence and grow the business without hitting too many bottlenecks? So, look, that's a whole topic on its own. But in short, our advice to anyone trying to undertake some sort of business is, first thing they should do is go and find people who've been successful in doing something very similar to what they're doing, may not be exactly what they're doing, globally. So who are the best people in the world that have done something similar to you? Go and get them to mentor you, build an advisory team, and bring on people who have a track record of doing what you've done multiple times, not just one-hit wonders, but people who have actually done this several times. That is the first thing to do. And together you can create a strategy depending on what your goals, resources, and timeline is, where you create a strategy in terms of what are the key milestones that you want to hit over a period of time, and what are you trying to build. And then you sequence the type of activities to hit each of those milestones. And all of this depends on resourcing. So if you've got access to capital, you can get a lot more good people. If you don't, you have to be a lot more frugal around how you bring people on. And so when I IPO'd my company, I raised 22.5 million at IPO, and then quickly thereafter some more money, so in total about 40 million, so that we could hit the ground running on a global exploration. So if you can raise the resources and you've got good people to oversee, so a board, different advisory teams that can help you in those key activities, then you bring on more of the C-suite sort of people. So it's a complex question. It's not something I can answer, but it depends on your resources. And, do you have a speed to market product? Do you need to get out there? Have you got a lot of competition? Or do you have a competitive advantage that no one can compete with you in the first 3 to 5 years because you're 3 years ahead of everyone else, and you've got a bit more time to roll this business out? I mean, you need to look at where you sit in that competitive advantage space So if you don't have a competitive advantage, raise as much money as you can and bring on the best people you can.
I guess in business, there's some key fundamentals, which is, a business will never outpace its leader. And when you are starting an organization out, it's so critical that, in some ways you have to be a master of everything. You're the HR director, you're the ops manager, you're the CFO, etc. And I think probably one of the most powerful takeaway messages, and yes, channel marketing, conversion, and runway and burn rate, all of that stuff is really critical. But ultimately, it's your people that are going to lead to your success. And for me, the biggest takeaway was giving them permission to fail. And I think as leaders, we always abhor the notion that somebody is going to make a mistake, or people are, afraid of giving it a go because of the repercussions. But ultimately, that is so powerful as a leader if we actually create that culture where, we need to give it a go because we need to get going. Let's not let perfection get in the way of progress. So thank you for that. And I'll let you respond, Basil.
Yeah, I've been in all sorts of organisations, and look, 30 years ago when I used to think if you just worked harder, you'd be more successful. If someone mentioned culture to me, I didn't even know what it meant. And as someone without any handout, culture is everything. If you want to be a leader in any industry, you need to have a strong culture. You need everyone aligned, and a purpose for what you're doing, and an environment where people want to come to work and do their best. And so those companies, whether it's an Apple or a takeaway store, those companies that set that culture up will attract the best quality people. And so good people get to pick and choose where they work, and they'll generally go to somewhere with a good culture. So it's a self-fulfilling prophecy. If you've got a bad culture, you keep hiring average people and you get average results. And I think people want to be able to explore their ability to contribute, and they want to be part of the decision making. Ray Dalio has got the biggest, private fund in the US. He gets the lowest level employee in on the decision making and allows them to have a voice. He's an incredibly successful person, and so whether you're someone like Ray or you're a small business or a startup, it's hugely important to make sure that you recognise, as you said, that you're the bottleneck, and that you need to bring on other people to help and all pull together to deliver something that means more than one person could. And I know working in small teams, we've outperformed a lot of multinational companies just because we've all been focused to support each other and get results down. So I think culture is a big thing.
Well, gentlemen, I think that's the end of the questions that have come through. So I will say my final messages and then hand off to the two of you to sign off as well. But as the president of the Melbourne Business Network, we bring these types of speakers and webinars to our community. It's what we do, experience it. But we'd also love for you to come on board as members. So do be sure to take up on that offer. Over to you, Bradley and Basil. Thank you so much, everybody.
One thing that we should cover is next week is going to be a great session. It's one of my favourite topics, and it's all about investment readiness and raising capital. And not just it's not just important for those people that want money. It's really bringing a different lens to your business and looking at it the way an investor would. So it's hugely valuable for all sizes of companies, for all types of entrepreneurs, whether you're raising money or you're not. and I think there will be a lot to benefit from. So if you know anyone that's raising capital or would be interested in this session, they're more than welcome to come and join in and ask any questions. So we'll try and make it as interactive as possible. Thank you very much. I appreciate the opportunity to come and talk about building companies.
Thanks very much, everyone, and we hope to see you in the next event.